Hello and good Friday morning to you. Thank you as always for joining me. You know, not that I'm surprised, but the markets are getting hammered again this morning, and there's a lot of fear creeping in around the edges. So I thought we'd take a deviation from our normal routine and talk about that for New York Minute. Big questions of the day. Why the sell off and why now? Well, think about it. The markets are all about psychology right now. Nothing else matters until that's sorted. Not the Fed, not earnings, not politics. Nothing. The big money got spooked when Michael Big Shortimus Predictimus Burry filed his 13Fs, and the computers they use, the big money that is, sprung into action with ginormous sell programs that are once again racing to the bottom this week. Now, I've been telling you for years that computerization would introduce unprecedented volatility, the rise of passive investing too, meaning the widespread proliferation of funds, ETFs, mutual funds, zero DT options, the shebang, right? Now, my friends, whether you believe me or not, it's time to reap the whirlwind. The machines don't care about valuation, fundamentals, or your retirement timeline, right? They care about flow. Now, passive products like index funds, ETFs, and mutual funds in particular don't care about price either. They buy because, ta-da, money comes in, and they sell, ta-da, because money goes out. Full stop. That combo turns every wobble into a whipsaw, every twitch into a tailspin. And the worst part, big money knows it, but the weak money feels it. Now, contrary to what you might think, this isn't new. In fact, our brains have always processed what's called recency bias. It makes more recent information seem more important. But social media and 24/7 news cycle and the near instant availability of information, particularly via your smartphone, have made this more challenging than it used to be. Now, you want to get and keep your emotions out of the equation before they kill your portfolio. Proven tactics like dollar cost averaging and its lesser known cousin, value cost averaging, into world class names on your buy list is the way to turn panic into profit, especially on days like today. And you do have a buy list, right? Let that sink in. Now, the OBA family, of course, does have one, and they know all about those things. And most importantly, which companies can be calmer ports in the storm. Be sure you do too. Now, keeps investing hip in this department. Volatility isn't a big threat, but it's a big old door opening. I mean, put this another way, right? When the algos I have rented lips today. When the algos start tossing the furniture around, you want to be looking for an entry, not an exit. Now, how low can good markets go? That's a question I'm getting a lot this morning too. It's unknown, and anybody who tells you otherwise is talking out of an unmentionable part of their anatomy. How much farther the markets fall or could fall is a function of how much leverage is still in the system. And we don't know that. What do I mean by that? Leverage in the system means how much money big traders have borrowed. They're usually up to their eyeballs in debt because that's how they magnify returns. So, logically, they'll sell down until the VAR, value at risk, is below thresholds that would otherwise result in a big, hairy old margin call. Now, they'll usually start with tech because it's A, easiest to unload, and B, usually the highest leverage holdings with the most VIG. So, should you worry? That's another question I'm getting a lot this morning. That depends on what you own and how you own it. If the answer is you're a speculator and you own a lot of crap stocks, which by the way is a very technical investing term, good luck with that. You could be in for a rough ride. It's not wrong, but you just might have a rough ride. If you're an investor and the answer is the world's best stocks, your portfolio will undoubtedly come under pressure the way mine is, but odds are will fall less, stabilize faster, and the best part, come roaring back sooner rather than later. The markets always have a very defined upward bias over time, and it's critically important you play to that right now. Personally, I am not the least bit worried by what's happening, nor the sell off. Neither are world class investors like Ron Barron, for example, who said point blank that the tech sell off is an opportunity. And my favorite part, that he's never selling his personal Tesla stock. Take that for what it's worth. Mary Callahan Erdos, CEO at JP Morgan Asset and Wealth Management, says investors should be focused on opportunities ahead rather than worrying about whether AI is a bubble currently. I agree with that one as well, to which I will simply add my own take on things. Investing in optimism beats cowering in pessimism. Take a look at a chart that's in the written version of the 5 with Fitz today. See if you don't agree. Print it out, tape it to your monitor, especially on days like today. Now, the right mental framework matters most. And let me be really blunt here. Most investors fail over time, despite their best intentions, because they worry about moments in time. And they do that because they lack a proven long-term framework to get them through the short-term noise. Now, the good news is that this is a totally fixable problem, but you got to understand the perspective I'm talking about. If you're investing for days, if you're investing for weeks, if you're investing for decades, it's very, very different. There's another chart in the written version of the 5 with Fitz that you really do need to take a good, hard look at, particularly if you're upset or worried or concerned or feeling anxious about what's happening today. Then I want you to find people who know what they're doing and learn, dang it. If it's me, cool beans. People tell me that what they've learned by being part of the One Bar Ahead family has changed their lives and their financial future. If it's somebody else, that's also cool beans. Either way, the point is, I want to make that you understand that volatility is a traveling companion, not something to fear. So again, find an expert who resonates with you, who has the chops and who has the experience, and learn. Dang it. This is on you. It's your move. So what to do now? Well, this is as simple as it gets in my world. People tell me all the time that they're going to wait for a pullback or a correction or something else to buy. Well, here we are. Do not be the one chicken in the barnyard who loses out. Keith's investing tip in this department: chaos always creates opportunity. And the more the former there is, the more the latter you have. Now, what about hedging, right? Let's throw this one into the hopper just for kicks. I get that question a lot, especially on days like today. The reality is that most people misunderstand hedging, believing that it's going to help prevent losses. Not true necessarily. Hedging, when done properly, at least in my world, is how you stay in the game. And to that end, I penned a quick 5-minute guide during COVID about hedging without options a few years ago to help people get through volatility like we're experiencing now. And I think it still applies. You can check that out using the link in the written version of the 5 with Fitz if you want. Frankly, though, I'm going to just simply stick to my bippies. This isn't rocket science. Buying great companies never goes out of style, especially if you got dividends and you can reinvest and you use simple tactics that help keep you on offense, even if you got to think defensively to do that. You can easily do the same thing if you want to, but you got to make the decision to do it. Now, the investing tip in this department is really straightforward. When the crowd panics about spending, particularly during a tech revolution, history shows that is very clearly and very usually your time to lean in, not back out. The future belongs to companies laying track, not the ones waiting at the station. Speaking of which, I'm going to be sitting down on Sunday with the venerable Susie Orman for a very special interview via YouTube. Now, you'll be able to watch that right here on my channel, but also on Susie's channel if you like. And frankly, I really hope you do. There's a lot of misinformation, hype, and hoopla making the rounds right now. We are going to set the record straight and hopefully inject some confidence that you'll find helpful too. Today's bottom line: the markets are the only store on earth where people fear a sale. Let that sink in. And now, with your grace, I'm going to go do a little shopping. You? As always, let's make it a great day and finish the week strong. You got this, I promise. Thanks as always for watching, and I will see you on Monday. Cheers.